Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is January 24th, 2023. And Bitcoin is retesting some crucial resistance, flipping it into support. Okay, on the thumbnail, I pointed to this line, okay? And we talked about this yesterday, but this is very important. Excuse me. A lot of people are wondering why we're spending so much time in this range, okay? We came up and we just started ranging right here, okay? And as a result, because people are impatient, because consolidation is tricky, people are thinking that this is distributive, meaning this is where we come and start putting in a consolidation reversal to dump, okay? And a lot of people who do not trust this move, let's go on the daily time frame now, let's zoom out a bit. A lot of people who don't trust this move think that we went up so high, so fast. I hear it so much. We went up too fast. It was too much. It's just too high. I mean, 20,000 per Bitcoin. Oh my God. It's just such a high valuation. We need to come back down. It's just, don't get too excited now. And also, the people who, as we discuss on this channel at length, are over-reliant on indicators. They look at this stochastic RSI indicator and they see, what they see is confirmed bearish divergence, right? You make a higher high in the price action. You're making a lower high here, and you have your lines crossing, right? Your K and D lines crossing. So they think this is confirmed bullish divergence. It's going to play out, but we understand that divergences, one, don't always play out. Two, when they do play out, they typically don't look like this, okay? And we know, just by experience, in a trending market, up or down, your low time frame momentum indicators like this stochastic RSI or the regular RSI or the MACD or whatever, they're not going to be as reliable, okay? So we keep it on, but we could just as easily sort of hide the stochastic RSI because it's not on the daily time frame. It's not going to faithfully represent this momentum. The price is just, if it is truly impulsive, it's going to keep going up and up and up. People are going to remain in disbelief. It's going to keep consolidating sideways. Very important point. Let me come that. Let's go back down to the 4-hourly time frame. Let's make that point, guys. When you're seeing consolidation and the market's doing two things. One, it's consolidating minimally, meaning if a typical wave 2 consolidation or retracement, right, goes between the 382 and the 618 Fibonacci retracement of the previous impulse, you will consistently see shallow 0382 retracements, okay? Shallow 382 retracements. You'll consistently see that. Also, instead of retracing down, you'll see running flats. You'll see really quick sideways, anything than you'll see sideways consolidation over downwards consolidation if you're in a bull market, right? Or if you're in a strong bear market drawdown, you'll see sideways consolidation instead of upwards consolidation, right? The market is just, the selling pressure is so strong that even your retracements are up and to the right. That is a mark. Those are marks of a very bullish trend. And you will continue to see that. And people who are on the other side, they're in shorts or they're on the sidelines or they're expecting a pullback, a strong pullback, they're going to be very disappointed. Because you're always going to see that in the short time, a relatively short time, right? We just came out of a bear market that lasted almost 650 days, right? Like 400 days, 400 and some odd days down, and 200 and some odd days, 230 days, I know, precisely, 230 days sideways, okay? After all of that, people are still expecting for us to go down more, but the trend has changed. Those 230 days sideways have accumulated a lot of buy orders, exhausted the selling. So now the trend is up. People just don't get it. Markets change character. They don't always stay the same. The character of the markets are different now. If this truly is an impulse, which it seems to be, you will continue to see sideways retracements, sideways pullbacks, really strong pullbacks. This is why it is unadvisable to try to, one, short these sideways moves, because they're going to be very, you're not going to get much in terms of, a huge drawdown to the downside. The character of the trend, the saying, the trend is your friend until the end. Notice the trend. When we talk about the trend, I think Elliott wave theory gives us the vocabulary and the tools to adequately really understand that saying. The trend is your friend until the end essentially means if you are in an impulsive market, high time frame impulsive market, don't counter trade, right? Don't counter trade. You can, but on a low time frame, you're asking for it, because all of these small time frame consolidations, they're going to be shallow, so you're not going to get much of it if you're going to try to scalp short, and they're going to be unpredictable. So, sideways, 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 you're not going to get much in terms of, the position or your direction of trade, right, if you're short. And then after it's finished consolidating to the side, it's just going to pop up, okay? So that is what I think we're in. And as I said yesterday, and this is the title of this episode, Bitcoin just broke out of a 434, the title of this live stream is something like, we are RS flipping this 434-day downtrend, okay? I don't necessarily remember how I worded it this morning, but it's something to that to that effect, okay? If you take, let's go on the daily. So, let's go on the daily. Let's get this. Okay, there we go. Turn off auto. And here we go. 434 days. Okay? Since November of 2021, when we hit 69,000 at the top of this B wave, we made a new all-time high. Okay? The all-time high was excuse me, 60,000 or some odd. We hit 69,000. 434 days later, we're finally breaking that. Okay? That's very important. But as I've said before on the channel, and as I emphasized in yesterday's live stream, it's not enough to break the trend. You'll see throughout the charts on many different assets, you can see fake outs or times where the trend was broken and you come back down below the trend. It's not important. It's not enough to break the trend. That's important. Okay, that's a breakout. That does count as a breakout. But the confirmation of said breakout is a retest. Okay, and that's essentially what you should perceive this price action to be. This is why it's so important. Okay, still on the daily time frame. Let's jump right back down to the 4-hourly time frame. And guys, just notice the time frames should all talk to one another. They're not disparate things. You're looking at the same market. You're doing the same analysis. The different time frames are just a matter of convenience, right? I'm not going to fit all of the price action from November 21 till until today on a 4 hourly time frame, so I have to jump up on time frames, right? But the idea that, oh well, I'm bullish on the 5 minute and I'm bearish on the hour or something like that, like, that's sloppy. I understand what they're saying technically, but I think in terms of practical application and what you want to do, the way you want to think as an analyst, you want a contiguous, a consistent view of the markets and its time frame, irrespective of the time frame. You want to know, are we trending up? Are we trending down? Are we consolidating sideways? You just want to know those things, right? And the time frames are just different ways to analyze that, and the smaller time frames are specifically for entries and exits. Okay, entries and exits. I know some people out there are probably trading the small time frames because they're day trading. You know, very few people are day trading, at least successfully. Okay, so the majority of people, most of us, are just going to be using those small time frames for our entries and exits and to understand what's going on a small time frame. But it doesn't change the fact that you have a sort of a synoptic view of the market. In any case, this is why. So this 434-day downtrend that we just broke right here, okay, on Friday, is so important because remember, it's not just the break. That's the breakout. Great. Now it's the retest. And I believe that this was the retest, this 3-wave move, okay? It could, and I'm going to say this here, it could be that this is going to go like this, okay? More specifically like that, okay? But then again, this may have been it. This shallow retracement of, I would say that your impulse starts here. And if you pull it, do you see what I say a few moments ago? You're going to see minimal downwards moves. If this is a wave, a 5-wave impulse to the upside, and this is the retracement, then you can see for yourselves the 0.382 Fibonacci retracement level was hit just barely. And that's all you need for a viable wave 2 correction. Okay? So it's likely, given that we did put that in, okay, that we can move up. Another reason why everything that comes after here is just consolidation, reversal, and preparation for the move up is if you take the time that it took for you to go up, okay, in these 5 waves. And we can just jump down. This is 1 day in 20 hours. Let's jump down on the hourly time frame just to get more precise with counting candles here. Okay? And all of this is based off of the idea. And look, guys, I'm not even making this up. Look at the precision. And people were like, oh, Elliott wave doesn't work, all that stuff. The only reason I still use it, and it's not that I think it works, I know it works, is because I see it every day. When we say wave 2 corrections are a minimum retracement of the 382, maximum retracement of the 618, that is my confirmation. That, seen thousands of times over, is my confirmation. That's why I use it. That's why I put money on the idea that this is a viable principle in Elliott wave theory. Do you see? You hit that 382. Can't stress this enough. People think that it's relegated to belief and you're just buying in. I don't buy into anything and nobody, not just me, nobody buys into anything wholeheartedly unless it is true to them. It's become true to them from lived experience. And that's the only way you can do it. Even if you listen to somebody, after a while, you have to make it your own. And that's through practice and through your own experience, through your own, experiencing of all of these principles in the market. So 1 day, 21 hours to go up, okay? 1 day, 21 hours to go up, and to come down to hit that 382, it took 1 day and 10 hours, okay? I think in terms of Elliott wave theory, right? If you look at the idea, the principle, or the guideline, rather, it's not a principle, it's a guideline, in Elliott theory that states that waves of the same degree are comparable in time and in price, not equal but comparable. Okay, you see the comparability in price is that retracement is going to come between the 382 and the 618 of the prevailing impulse, and that's what you got with that 382 retracement. And then the time it takes for that 5-wave move to come up is going to be approximately the same time it takes for that 3-wave move to come down, right? And I'm talking about wave 1, wave 2. You see that. That's it. 1 day, 21 hours, 1 day, 10 hours. That's not exact. That's why I say comparable, not equal, okay? It's likely, given all of that, that once you put in 2 degrees of AB basing and a pivot, you can and will break out of this. Lots of people, once again, are waiting for that retracement, and they're not going to get it. Lots of shorts trapped with stops over here, over here, over here are going to get liquidated. It's going to happen. There's no reason to come back here. Why would you come back here? You retested this. Very important 230-day resistance of the bear market accumulation, right? We went sideways for 230 days. That was the upper limit of that 230-day accumulation, and that was dealt with in this 3-wave move. Then you come up, and you spent 434 days, right, in a downtrend. You broke that, you retested it. Maybe you continue, but it's likely that that was it. There's no reason, technically, to come back to these levels. Okay? So many people will tell you, oh, but we're gonna retrace. Why would we? Right? And if you move out, you zoom out, and you look at this on a higher time frame. Again, we're using the log scale. I talked about this. I've ranted about this. Be careful. There's so many analysts and experts out there. They're going to show you Bitcoin. I saw this on the Crypto Banter channel. They were showing Bitcoin on a 3-month chart, okay, and no log scale, like this. Okay, like there's so much out there. There's no shortage of data and information and analysis and people's opinion. You got to make sure you are okay with, what you're watching, what you're consuming, okay? And what people say. Just because they're publishing it on the internet doesn't make it true. You have to do your own due diligence, right? Does it make sense to represent a parabolic chart, a parabolic price movement on a linear arithmetic scale? You figure that out for yourselves, okay? And if the people who are giving you the analysis don't even know how to set up their charts, you figure out whether they're full of it or not. It's not somebody else's job. There's no central body. There's no central channel. There's nobody who's going to tell you that's bullshit. That is true analysis. You have to be the purveyor and the person discerning good from mid to bad, right? So that's a huge responsibility. And I think in order to do that, you have to learn a little bit about technical analysis. You have to learn a little bit. You have to do your homework, right? Because how can you criticize what they're telling you if you have no clue, right? That's the paradox. And that's the tricky bit. Who to follow, who to listen to. At the end of the day, whoever you follow, whoever you listen to, you're going to have to lean on your own judgment. And, either you buy or you sell because you believe, and you will eventually make the decision. Whether you do your homework or not, you believe what somebody's telling you or whatever. Okay, anyway. So on a higher time frame, and we did, what did I say? I think I talked about that. I talked about that. Yeah, so that's essentially all that's happening here, okay? There's no reason to come back and do the retest. That's what I was saying, okay? And that's what I was thinking. And, okay, now, making use of some of our indicators. Let's turn our stochastic RSI back on. We seem to, let's say for argument's sake that this indeed was the end of that retracement, okay? So you go up in 5 waves, right? And then you come back in 3 waves. And that's all she wrote. Everything here is what we call consolidation reversal channel, okay? It is what you see in any reversal, okay? After you can basically changing from corrective, do consolidation reversal, you go back to impulsive. You reclaim or you reestablish this trend, okay? If that's the case, then pay attention to how this is doing consolidation reversal. Once again, it's up and to the right. These trends are really bullish. Typically, we talk about consolidation reversal channels as 2 degrees of AB basing and a pivot, and you can see that it typically looks horizontal. In a corrective mode where we've been in, for the past 230 days, we've been sideways, right? We've been doing high time frame consolidation, high time frame accumulation. A lot of these accumulation channels were sideways. But now you're in a trending market. Your consolidation reversals are even bullish, right? That should tell you something. That gives you a good idea as to what is going on. 1 second. I got something on Twitter. Somebody's... let's see. One second. Never mind. Anyway. So yeah, that's pretty much it. I was talking about our momentum indicators, okay? Our momentum indicators, the hourly completely oversold, okay? So it's likely from here you move up, okay? According to our momentum indicators. On the 4 hourly, completely oversold. It's likely we move up from here. So what do you expect for people who are short, for people who are bearish, and they think that we're going to break down from this perceived bull pennant? Not even the indicators are giving you any kind of support. The hourly is basically oversold. The 4 hourly is basically oversold. We've spent our time resetting these indicators all the way down to oversold levels by going sideways. That, I will always say, is very, very bullish. If you're resetting your momentum by going sideways on the chart, that is another way to read bullish divergence, okay? Obviously, the daily, we already saw what that looks like, but at least on a small time frame, it's very likely that you're looking to get a move up, okay? So, amazing videos of the world. Hello, Akanksha, hello. You see this weekend it crossing 2830, Akanksha asks. Yeah. My next target, if we have to be specific, my next target for Bitcoin is in the 40s, okay? Let's look at this. And I haven't seen really anybody talk about this other than like one person on Twitter. Game of Zones, I believe. This account for technical analysis. But, you know, I've pretty much been saying that we're likely to hit this level right here. Let's just draw it like this. We're likely to hit this level right here, okay? You know, at 46, I would say that even 46 to 50, okay? Because you want to make that higher high, right? If you're bullish, If you're bearish, if you're trending, you have to establish a trend. You're pretty much just perpetually reestablishing the trend. You're establishing and reestablishing. Okay? So for me, let's put this in. This is the zone. This is the high. You know, and I don't know that it's going to go to these levels, and it doesn't really matter to me. What matters mostly is that we break through here and come back to retest it. I've said that before. If you look at this chart, the only significant, not major, but significant resistance is right here, right? Of all of this area right here, that's the only area that is proven to present some sort of resistance, because it's resistance because we're below it, right, to the price. That being said, I believe what's likely to happen is that we come back to it. Do you see? But in order to come back to it, we have to break out higher. So the question is, how much higher do we go? I think we have to go substantially higher than this in order to come back and treat it as support, right? Just like you see all the time, you break resistance and you retest it as support. You break resistance, you retest it as support. So we're going to have to establish the trend in that way. Does that mean breaking this high? Maybe. I think it does, because I mean, we might go really, really high. Why? Because I'm just looking at the high time frame, right? And again, I've shown this on the channel before. On a really high time frame, or on the weekly time frame rather, you know, this Elliott wave count, this high time frame Elliott wave count is likely to yield a target between March and May. Okay, so March and May, between March and May of this year. In order for that to happen, I believe that we put in some relatively large waves. So when we're talking about breaking and then sorry, let's put this up. I'm just gonna draw this really quickly like this. Okay. Again, I don't know how it's going to matriculate. I don't really care, to be honest. Would I be surprised if we did something like this? No. That wouldn't be too out of, you know, that wouldn't be so strange to me, right? Something like this. Something like this. Do you see? So I'm basically just spitballing. Here, again, my main point, my main purpose of doing this high time frame analysis isn't to tell you exactly where every single wave is going to hit, you know, where every single one of these white waves is going to hit. Meaning, how this minor wave 3 matriculates up is not really my concern. Okay, when is wave 1 gonna hit? When is wave 3 gonna hit? I don't know. I don't care. Like, all I know and all I care about is that I've accumulated my positions and I've prepared my longs to take advantage of this epic, monumental, historic cryptocurrency bull run for 2023. All I know is, according to the high time frame analysis that I've put in probably a year ago, is that it's very likely for us to hit the top of wave 3, minor wave 3, between March and May, okay? My technical date is February 19, 2023. This schematic shows February 19, 2023 to be the technical date. But again, there's some variance. That's why I say March to May. All right? It's not like precise to the day. This is just a model. This is just a framework, right? And once we come up, would I be surprised if the first wave of this minor wave 3 impulse to the upside stopped or found a retracement past 6 figures? I wouldn't. That would actually make sense. Okay, I haven't done this analysis before, and I haven't said this before, but this makes a lot of sense to me. And thank you for asking the question. Again, this is partially why I do these impulses, these analyses, because they kind of bring something else out. I do a lot of analysis on my own, but when I do it live for some reason and people ask questions, there's some information sometimes that comes that I don't even know about. I don't know why or how, but it just is. If you know my work and you've seen, if you're subscribed and you've seen my high time frame analysis, you know where this line comes from. This dotted line, this parabolic curve, okay? This is not Elliott wave analysis. It's basic support and resistance. And it actually comes from a trend Bitcoin has put in since the beginning, right? Since the very beginning. You can see from 2010, you can draw a line, a parabolic curve, right? Connecting every single high that Bitcoin has ever printed, okay? This was the top of the 2011 bull market. This was the top of the 2013 bull market, 13 bull market. This was the top of the 2017 bull market. This was the top of the 2021 bull market. And this should be not the top of the 2023 bull market, but the top of the it should be the first move of the 2023 bull market. It should represent significant resistance. And again, support and resistance is simple. 2 criteria. What makes a support and resistance important? How many touches and how long? So you can see there's 1, 2, 3, 4 touches, and spanning this spans, since 2010, that's 12 years. That's a 12-year trend. Once we touch this line, we're going to reject. That being said, let's go back. Now that I've told you, for those of you who may not be familiar, the provenance of that line, okay? And so this is kind of answering a conscious question. I didn't know that I could, but I think with a high degree of probability, the analysis shows this is a very likely scenario, okay? And what is this scenario? It's that wave 1 of this minor wave 3, okay? Wave 1 is from where we are now all the way up until we hit the top resistance of this line. Okay, and typically what's happened, once we've hit the resistance of that parabolic trend line, we've gone into a bear market. But what's going to happen at this point is, it's more likely than not, it's going to reject into wave 2. And wave 2 is going to take, as we always say, approximately as long as wave 1 took, okay? So if it takes us 2 weeks to go up to 130K, it may take us 2 weeks to come down from there. But I believe that is your first wave. I wouldn't be looking for a large retracement in Bitcoin until we get into 6 figures. I just said it. I wouldn't be looking for a large retracement in Bitcoin or any cryptocurrencies until we get into 6 figures. because once we get into 6 figures, we will more than likely have hit this parabolic trend line, and that will more than likely take us into our wave 2. Okay, wave 2 of this minor wave 3. So if this is minor wave 3, I think that would constitute, we would call that minuet. Let's see. Sometimes I need to refresh my degrees. Let's see. So you would just go into degree, and you see minor, minute. Yeah, minute. Minute, right? Or minute. Why can't I read all of a sudden? Minute, minuet, minute. I think minute is how you say it. Minute. Okay, so the minute, it would be minute wave 1 and 2. We can even change. Let's just keep this on and actually change it into minute waves, right? Okay, so now they're minute waves. We're just going to keep this on because this is interesting. I think minute wave 1 comes up into, well into 6 figures. It comes back down. And what I think is you get support for wave 2. Wave 2 ends, obviously, as it tends to, between 382 and 618 of minute wave 1. But it finds support at the bottom of this channel right here. You reestablish, because what are you doing here, right? You've kind of done a throw under with this consolidation reversal, right? Where the price has been accumulating after this drawdown. What's going to happen is you get back into this trend. You get back into this parallel trend. You break in. You reject off of that 12 to 14 year resistance, and you find support at the bottom of your channel. I believe that is very likely. That is very high probability. Okay, and that would work because if you take this minute wave 1 and you look at the retracement, what do you see? A very bullish pattern, or very bullish retracement would be a minimum retracement of the 0382. Can't make it up. There's a lot of confluence saying that is a likely scenario. Okay, in terms of when, I don't know. By Sunday, I don't know, but it's got to be soon. At some point, you have to start moving, and quickly, because when it's all said and done, you just have a few months to complete not just this wave 1, wave 2, but all of this. This minor wave 3, according to our analysis, should be finished in 3 to 4 months. Okay? So that's my answer. I hope that was helpful. That was interesting. Thank you for answering or asking that question. Yes, 6 figures. 6 figures. You saw the analysis. Again, I'm not making shit up, pulling it out of my ass. Like it. That's what the analysis shows. And this is something that I've put in. I had in for the past year. You know, if you guys have been subscribed, you know that this master chart of Bitcoin has been in for quite some time. Okay. And we've talked about this parabolic resistance, basically the resistance of all resistances. Bitcoin has never, ever broken this resistance. In 12 years, it's always found it's always rejected off of this resistance. I think the first time you're not going to reject off of it, but you're finally going to consolidate at resistance is in that minute wave 2 correction. That's my I don't want to say prediction. That's my analysis. So I'm going to trade that, or I'm going to expect that, but also I don't know how it's gonna go. Like I said in the beginning, you know, I'm not so concerned with how. I'm just concerned with what. And the what is we're going up. And that's what mainly concerns me. And so I'm going to prepare for going up. How we're going to go up, I don't exactly know. Is this going to happen? I don't know. But I think that that's likely. Yes. And I think a lot of people are going to see us break into six figures and think that's it. And the bear market is going to, basically, everybody's going to sell once we get into six figures. And they're going to think we're going down to zero. We're probably going to just find support back at all-time high. Do you see? This is nice. This is really nice. Look at this. Look at this. You cannot make this up. Look at that confluence. I love it. I absolutely love it. I had no intention, zero intention of doing this particular analysis today. But the question was posed. We got into it. And I absolutely love it. I think that this is a very realistic scenario for Bitcoin's matriculation in this minor 3 wave. Minor wave 3. You're going up. You break, you know, all-time highs. By the way, people think all-time high is a resistance. No, it's not. There's no real resistance here. It just, you know, that's the resistance right here, the top of this channel. But it's not a significant resistance. I expect that this first wave, this minute wave 1, break it, go well into six figures. Everybody's like, what the heck? What the heck is going on? We come back and we find support at all-time high. That all-time high, that 69K, is it is, what's the word I'm looking for? It's confluent, there we go, with the bottom, the base of this channel. Okay, this channel is a channel that clearly has some touch points, right, that we've drawn in. It's confluent with the top of this channel and confluent with the top, the previous all-time high. I think that's absolutely beautiful. And it's a minimum 382 Fibonacci retracement. Isn't that nice? I think that's great. I think that's absolutely fabulous. One more thing I want to say about this. Let's move off of the master chart. But yeah, thank you for posing that question. I love it. And yeah, it sounds crazy enough to work. I know a lot of people are like, yo, this guy's off his rocker. He's just, now it's just too crazy, you know? But yeah, that's the analysis. I'm not judging it. It just is what it is. The other thing is, I want to say this. Don't get impatient. Just let things happen. Get in your trades and let things happen. Don't overanalyze things. Like, you do your analysis and you just wait. Let it happen. Like, we'll go up when we go up, right? Like, I just finished telling you that, you know, I think this is going to happen and that's going to happen and all that stuff. I don't know what the timing is going to be like. You know, how we're going to, you know, print it, when we're going to print it, you know, by what and how many days. Just let it happen. Just work on your levels. The how is like, when you're dealing with analysis, you're asking the what. That's enough. That's enough to make money. What? What is happening? Is it going up? Is it going down? Is it going sideways? Okay? The how, the why, and the when, that is interesting, but it doesn't necessarily contribute to your making money and winning trades. So don't get bogged down with the what, the why, or the why, the when, and the how. Okay? We're playing around and we're trying to ask, you know, when and how, right? How with the minute waves. When, you know, should we start pumping? by this weekend, and are we gonna hit these targets by in 3 to 4 months, I believe. But that's not as important as the what. I would say focus on the what. Keep things simple, and just let it work for you. At the end of the day, this trend that we're in, let's go back on the daily time frame. This trend that we're in is likely to continue, okay? So what? We're answering what? What is this? This is a trend, likely, it's clearly a trend, right? We're going up. It's likely to continue because we're breaking important resistance. It's likely to go up considerably from here because there's literally nothing in this area. Nothing. There's no resistance. It's just empty. We call that a volume desert, or a volume node, or not a node, a volume desert. It's basically empty. There's no trading in that area. Okay, so do expect from here to between the 30,000s, easy. But again, that's not significant, or that's not major resistance, it's significant resistance. And what's likely is that we go above it and retest it and then continue. And then once we break all-time high, we're in what we call price discovery. There's no resistance. There's no previous trading history. It just goes. There's no precedent. So anything above 69K is just easy. It's nothing. There's no barriers. Do you understand? Like, this is anything between what we're on now and all-time high will take some work, probably take a little more time than anything after. I hope that makes sense. Because all of the trading history, all of the different levels, all of the resistances have been printed. And that is causing some resistance in the movement of price. Okay. So, yeah. Akansha says, there were a lot of people who came in at the previous all-time high, so we should expect some selling and bounce back up. Yeah, I mean, that's always true. A lot of people sell at all-time highs. A lot of people get in at all-time highs. 100K is a very psychological round number. People have been speculating about. I mean, it's a monumental kind of a watershed price figure for Bitcoin. Any asset, right? You hit a new figure like that, you're going to have a lot of people selling, a lot of people making a market there. But that's how I think the market will matriculate up, and that's why I think it. Okay, let's have a quick look at the DXY, the US Dollar Currency Index, the main indicator on this channel. Okay, this is what moves all the markets, especially risk on assets like Bitcoin, stocks, all that stuff. We're still in this range, and we've been in this range for almost 2 weeks. Just up and down and up and down, up and down. The last move we had was a move up to the top of the range and a big rejection off of that, okay? Expect this range, very simply, to continue to the downside, like a bear flag, okay? So this is some sort of consolidation, intra-wave consolidation. Once we do finally break down from this range, okay, that brings about a very, very big move. It activates a strong loss of support, okay, big loss of support, as you can see here, okay. This was one loss of support. This is another big loss of support. Again, you see there's a big gulf here. There's very little trading between where we are here and these targets. So do expect this to fly down a little easier than what all of this was. As you can see, there's a lot of trading being done here. There's a reason these moves were so choppy, okay? So that's essentially my read on the DXY. It's not that complicated. It just looks like it's continuing its downtrend as it's been in since September. So that's the DXY. Dollar's going down, Bitcoin's likely to go up, okay? Now, I think we can look at some altcoins. Okay, Cardano. This is a great example of breaking a high time frame. I talked about this yesterday, but it stands repeating. It bears repeating. You're breaking really high time frame resistance, retesting it as support right here, as you did. You can see. Okay, if you can't see, let's zoom in. That's the retest right here. You're essentially doing what you're doing with Bitcoin, but this is a little bit more advanced because you did that retest of both the bear market accumulation and the high time frame drawdown, and you bounced up. And now you're consolidating a little bit. You should continue. We haven't seen anything yet. People are saying, well, these moves have been crazy. We've gone up so much. We haven't done anything. This is nothing. Most people have no context, and this is why you do high time frame analysis. You know, I'm not going to go back to the master chart, but you understand. Or actually, yeah, let's just do it. Whoops. Yeah, that's it. So there's a reason you do high time frame analysis, because you want to have perspective. You want to have the view from the mountaintop, so to speak. You want to have that, you know, high time frame sort of nice view of what you can expect on a higher time frame, so you don't get shocked, right? The lower time frame stuff is fine, but the higher time frame, you have expectations as to what's likely to happen, okay? And so going back to the master chart, a lot of people, when they say 2023 is probably just going to see a high of Bitcoin in the 40,000s, may not even make all-time high, or if we push it, we're going to go to all-time high. Like, they don't have a high time frame view, nor do they have, probably they don't have the tools to do consistent analysis. They're kind of making it up as they go along. I know a lot of people I've seen lately using the Wall Street cheat sheet as their way of trying to analyze what's going on in the markets. And so they literally, because they don't have a tool, they don't have a tool in Wyckoff or in GAN or in Elliott Wave to do high time frame analysis. They don't know what the hell to make of this. For them, it's just some price action, and they're trying their best. But this is the power of good tools like Elliott Wave analysis, GAN analysis, Wyckoff. So I mean, it's not about one or the other. Just pick something you gravitate towards and learn it well. Learn it really well. You'd be surprised how many people, they literally have no tools for technical analysis. They can do a little support and resistance, but they don't know what context to apply that to. And when it comes to high time frame analysis, they're completely clueless. You know, they're posing the question, are we in disbelief or anger? Right? This morning on Crypto Banter, are we in disbelief or anger? What part of the market phase are we in? And based off of that, they're either getting in or waiting. So, you know. So that's Cardano. You retested it. Algorand, same thing. You're retesting, once again, very clearly, very nicely. You're retesting this high time frame resistance that you broke. You're not only breaking the consolidation, the bear market consolidation, but you're also breaking that huge downtrend. Guys, this is just going to go higher. It's going to go higher, but you shouldn't concern yourself yourselves with how, right? Does it do this? This? It doesn't matter. It's just going to go higher. If you go on the small time frames, you can see the same things that we've been talking about. What have we been talking about? We've been talking about bullish consolidation, meaning consolidation up and to the right. Consolidation with minimal drawdown, right? Instead of sideways, it's slanted. Don't underestimate this trend, or do so at your own peril. Because as you can see, all of these consolidations are up and to the right, and eventually it's just going to pop off. This is Algorand. People expecting a bigger retracement are going to be sorry. You're not going to get it. Very unlikely that you get it. Again, look at the stochastic RSI, your momentum indicator. What does it show you? It shows you that as you've been going up, the momentum has corrected, has come back down to oversold territories. So you reset your momentum all while printing a higher price. That is bullish divergence. That's a definition. That's the definition of bullish divergence. I know we look at bullish divergence as other things, sometimes using RSI, but this is a very nice example of bullish divergence. You don't want to mess with that. You don't want to counter trade that trend. Okay? And again, very importantly, on the high time frames, you've retested crucial resistance into support right here. This is that's it right there. Don't expect anything less than just a move up, okay? And that's it. That's that simple, okay? Bonk. Love it, love it, love it. Okay? Still doing its consolidation reversal on a high time frame. 2 degrees of AB basing and a pivot. I believe that you put that in once it starts moving. I'm so excited to see this move. This is a meme coin that I'm really excited about. I've invested in. Do your own research. I didn't put my life savings in it, but I do believe that it's going to do really, really well. Fundamentally sound shitcoin. That's great. Fundamentally sound shitcoin that's really, really low market cap, and that has a really good chance of doing so well in this bull market. Do your own research. Literally, the white paper on Bonk is 6 pages. So if you can't read that, I can't help you. Dent. Look at that. Look at that. This is what excites me about this bull market. This is what excites me. And I say bull market, understanding that these assets have not put in triple-digit days. They have not doubled in a day's time. We're going to see all of that, okay? We're going to do one of those things where, I do the show, we talk, we laugh, we joke. And then I do the show the next day, and, things have gone up 100+%. We're going to see that. Trust me. It's coming. I know we're not there yet. We're ramping up. Kind of like the roller coaster, going up and up and up the hill, getting ready for the big drop, right? That everybody loves. We're getting there. This is the roller coaster going up the hill, ratcheting up, retesting, getting ready. That is your buy point. That's a perfect buy. Not financial advice, but this is basic breakout trading. Okay, a lot of people can do that. Chris from Crypto, that's his trading tactic. A lot of traders, made millions doing only that, knowing nothing else about the market, just trading breakouts. That is confirmation, right? Breakout, retest, breakout. That's it. It's very simple. So that's Dent. As you can see, once again, you're dealing with high time frame, long-lasting downtrends, right? Lasting hundreds of days, and you just broke it, retested it, and you're gone. Dodo, same thing, right? Prove it to yourselves. Pull up the charts of the things that you invested in. Draw these simple trends. Prove it to yourselves. You're breaking 600 plus days of resistance of a downtrend, retesting it, making it support, and you're blasting off. This blast off, it seems slow, but trust me, it's coming. It's coming faster than you think, okay? Faster than you think. Here, it's very clear. That's an impulse. Very clear. That is a three-wave move down. Very clear that this is sideways consolidation, right? It's up and to the right. AB basing. Once you break this, it's over. It's over. And if you're bearish, I mean, just jump out. I've done it a million times. You know, take a small loss. Rather that than, I mean, not financial advice, but, you know, better to take the smaller loss than the larger loss. I mean, it's clear as day. You're going to get smoked if you're in a short. I don't know why you would be shorting this market. It's pretty irresponsible, but whatever. Dogecoin, same thing, and we talked about this yesterday. This retest was a little more involved, but you retested the hell out of this drawdown. Dogecoin has been down ever since SNL. Elon went on SNL May of 2021, and ever since we haven't seen anything but a drawdown. But this is going to change sooner than later. Ethereum, same thing. Prove it to yourselves, right? These massive resistances have been broken, right? If you think it's going down, then you probably, I don't know what you're looking at, to be honest. I really don't know what you're looking at, because this is not complex. This is not complicated. It's just very simple support and resistance. A breakout, retest, breakout. This is going to continue. It's going to continue. Litecoin. Breakout, retest, continuation. You're just about to break out with RSR. Just about to break out. Gonna retest this. And then continue. Okay? See, all of these assets are breaking out right now. They are breaking out. Right? This is already broken out of its high time frame. Shiba Inu. Broken out of its high time frame downtrend. Retested it. Now breaking out of its bear market consolidation. This purple box. Okay? Synthetics. Same thing. It broke out, retested this high time frame drawdown. It's going to continue up. It's going to continue up. You know? Don't worry about the how. Let it work for you. It's a trend. Just ride it like a wave. It's probably going to retest this very important midline for this bear market accumulation. Maybe that's going to be shallow. Okay? Maybe it comes down all the way to this line. Who knows? Gonna come back up here. Probably gonna retest the top of this bear market accumulation and then go up. Don't worry about the how though. Just let it happen. It's going to happen. Tron. Went up. Came down. Now it's gonna probably go up more. Okay? XRP. Look at that retest. Look at that retest of high time frame resistance. And it's gone. Okay? Expect this uptrend to continue. People are going to be in disbelief because they're stuck on the small time frames. They have no perspective. They do not understand what is happening. Okay? Imagine us continuing the bear market after, technically speaking, a 400 to 500 day downtrend has been broken and retested. Not just broken, right? Here it was broken, but retested. Broken and retested. That is what you want to see when you're looking at, at reliable breaks in the market. Okay, breaks of trend. You want to see a break and a retest. Here, break, retest, continuation. Okay, and then one of these moves is gonna be like this. Which one? Who knows? But who cares? Don't worry about which one, right? Just be in and exposed and be prepared, because that's what is likely to happen. Again, only playing probabilities. We don't know. We don't have a crystal ball. But according to this analysis, highly probable that you're going to get those big moves. V-chain tested the heart line or midline of this channel. Theta, you're matriculating up, okay? More than likely going to go up, retest this whole trend, right? This box, and then continue. Telcoin, same thing. You're at the top of this bear market accumulation, probably going to break it, retest it, and continue. Okay? When? I don't know, but it's likely sooner than later. Matic, you're finding resistance at the top of the box, but as I always say, it's not a rejection, it's consolidation at resistance. Big difference. The former is bearish, the latter is bullish. A rejection at resistance is bearish. Consolidation at resistance is bullish. You're getting consolidation at resistance. Do expect to continue, retest, and break out. Okay, you've already dealt with this high time frame downtrend here with Matic. Okay, it was broken out over here in October and retested, duly retested in November. Okay, this is the story. The market tells a story. You just have to be able to read it. DYDX. A nice continuation here. As you can see, after a breakout and a retest of this high time frame downtrend, you've gotten wave 1, wave 2. What do you expect? A wave 3, wave 4, wave 5, something like that, right? Where does wave 3 end? Who knows? Who cares? That's my point. My point is, all you care about, all you should care about is that retest happened already. Now you're just playing the waves. You're just playing the waves. This wave 1, wave 2, you know, wave 2 retraces between the 382 and the 618 of wave 1. You got that. So you expect to keep going for wave 3, wave 4, and wave 5. Okay? It's very nice. Oops. I want to go back. I hate leaving dirty charts, and I left this marking. Gotta clean up after. Alright, Harmony 1. It's a 2-in-1. You came, you retested not only the bear market accumulation, but also that high time frame 400 to 500 day drawdown. And now you're up, and you should continue to go. Okay, shouldn't be surprising. It's only a surprise when you haven't done the analysis. It's only a surprise when you haven't zoomed out and gained the perspective of what is actually happening. Okay, you can see this on Moon River. Very nice. You came up, you came down. That 3-wave move was a wave 2, quite clearly retesting the midline of that bear market accumulation. Now you continue with your wave 3 right there. Okay, self-key, same thing. Now you're working off of the midline. Let's zoom out for a second. You can see that these are high time frame trends right here. Okay, high time frame trends. So you're basically using this midline as support. And you put in 2 degrees of AB basing and a pivot here, and you're just working off of this midline. If this is anything like the rest of the cryptocurrency market, do you expect to not only break out of this trend, retest it finally, because you broke out here, but you never retested it, retest it, and continue. Okay. This I bought on spot. Very volatile, low cap altcoin. I don't recommend trading low cap altcoins on margin or on leverage. It's not a good idea. It's too volatile. I just buy it on spot, on support, and just wait. That's it. So we'll see. We should see some action sooner than later, okay? And, as to when we could see some action, whenever the DXY, the US dollar currency index, finally breaks out of this channel that it's been in for the past 2 weeks, we should see a big move in crypto, okay? It's just going up and down and up and down, up and down in this channel. I believe that up and down activity should be close to finished, okay? So we'll see. All right, let's see. So Akansha says, but would you sell your Bitcoin and ETH at those prices at 1 to 4 million? I'm not selling anything until we reach my final target. Okay, and like I say on the channel, I have a number of positions. Okay, I have maybe 22 different positions. Okay, that I'm managing. And actually I have 25 if you add my spot positions. I'm not going to nickel and dime anything or try to, I'm just going to trade this as one move. I'm not going to try and get cute and sell here, buy back here, sell here, buy back. No. What's really important, and what I've learned in previous bull markets and previous moves and in my years doing this, is the no matter how good my analysis, unless I can 100% say when exactly this is going to top out and when this is going to bottom, it's just too much stress and too much work for me to rebuild positions. Building positions is quite challenging. You have to go on a small time frame to do it, okay? I'm talking about leverage, obviously. I'm a leverage trader. I do a lot of work on leverage. I do have some spot positions, but even the spot positions I'm not touching. Why? Because there's always a possibility that you put in an extension. So instead of this wave 1 stopping here, maybe it goes a little higher. Who knows? Maybe wave 3 is extended. You never know. Are you going to get a shallow retracement? Are you going to get a deep retracement for wave 2? You don't know. So I'm not messing with it. I'm going to sell my positions, and that's plenty of money for me. More, it's a lot of money. It's great profit. I'm satisfied with selling my positions at the top here. I'm not concerned with this. I'm not going to overtrade this. I'm going to wait patiently. I've bought a lot over here, and I'm selling over here. Simple. Keep it simple. Whether I have 2 positions or 22 positions or 25 positions, that's my strategy. Buy low, sell high. Not buy low, sell mid, and then buy lower. No. I've done that before. I'm speaking from experience. It's not worth it. No matter how good your analysis or how much you think it's likely to happen, you have to understand, when you're talking about trading, especially when you're talking about leverage trading and stuff like that, if I've built positions down here, I not only enjoy the security of my liquidation point and my stop point being very low, but also I'm compounding my entry into an epic take profit. My yield is I'm doing really well. The second I sell, I have to start over again. Even if I have more money and I'm saving a little money here, there's always the chance, the possibility that I'm not able to rebuild all of those positions well here. Do you see what I mean? So as a pro, I'm not touching. There's too much risk. Even, if I'm doing this analysis and I think this is a highly likely scenario for Bitcoin, there's too much risk for me to sell here or sell here. I'm going to de-risk here. That's where I start selling. And we can talk about that a lot later, in some months, but we're going to have the signs. There's a few things that we can do to know when markets have topped. We're going to start to see the same thing that we saw on the bottom, on the top. Here it was accumulation. We're going to start to see a distribution channel. Okay, that is going to tell us when it's likely that we're finished. Also, we're going to be able to look at a high time frame momentum indicator, right, on Bitcoin at least. Not every indicator, not every asset is going to give you this kind of information because they just don't have enough data. But like, you're going to see the weekly time frame looks something like this. Okay, it's gonna be oversold for quite a bit of time, but so that's not gonna be so helpful. But what you're going to see on the monthly time frame is something like this, a little more straightforward. You're gonna see probably 1, 2 moves, okay, and that is when you want to sell. You want to sell when that monthly stochastic RSI momentum indicator is showing you some bearish divergence, or it's really showing you a top, okay? And then obviously we're going to go into, just like you get into positions on a smaller time frame, you go on the smaller time frames to get out of positions. But at that point, guys, you don't even have to be that greedy. You don't have to get the absolute top. It doesn't matter because, right, we will have gotten in down here. So, I mean, we'll all have technically made life-changing money on the way up. So whether we sell at that pico top or at a top, it's inconsequential. Okay, so that's my answer, Akanksha. I'm not over trading this market, and I don't recommend that anybody do. Like, I learned that the hard way. And by the way, my target's 2 to 4 million, not 1 to 4 million, 2 to 4 million. So Conscious is considering that would happen because of mass adoption, and buying Bitcoin would be bleak for so many at those prices. So isn't it better not to sell Bitcoin even at those prices and just hold on to it like real estate? No. That's why we read markets. It's not okay. And I learned this the hard way, and it took me a while to figure this out. And what Akanksha asks is a really good question, actually. So a lot of traders, a lot of Bitcoin aficionados, they have what they call a HODL portfolio. It's well, they say they do. Okay, we don't know what people actually do. This is what they say. They bought Bitcoin and they never sold, and they are never selling. Okay, yet and still, they have quite a lot of disposable income. Maybe that's all YouTube income. I don't know. In any case, should you do that? Should you buy and never sell? Because in the end, it's just going higher, and why take the risk of selling? This is what you do if you have no clue. If you don't read markets, and you don't read markets. And a lot of those people fall into that category. They don't read markets. They don't know how to read markets. They acknowledge that, and they're sort of playing this game long term, not just a few years, but a few decades. Okay? If we're reading markets, it's highly probable that once you get to the top here, you're also going to go down. So, Akanksha, if I know that my target's 2 to 4 million per Bitcoin, and that if I hold for the next bear market, it's likely to go back to 200 280 to 300K, do I sell? Absolutely. Absolutely. Because you should have ample amount of time, you know, about a year to buy back. Just like you did over here, you will have the opportunity to buy back in an accumulation zone during the next halving. This should be May of 2024, should be the next halving. This is when I'm buying back into my positions. But as an investor, as a speculator, as somebody who's chart literate, it'd be a crime for me not to take profit at this point and to watch all that hard work go right back down, basically all the way back down to this area. Look at this 12-year resistance. And this is where I really love this chart. Remember we talked about this dotted line and said it was 12 years and Bitcoin had never cracked it? Okay, for those of you just jumping on stream or who didn't watch up until now, let me just reiterate this point. Look at this dotted parabola. Look at this dotted parabola. 1, 2, 3, 4. 4 instances where it served as resistance for Bitcoin's bull market. Okay, my analysis indicates that the next time we meet that, it'll be with an intention to break it to the upside. Okay, since 2010, Bitcoin has met that fate every single time, making contact with that parabola. If indeed it does break it, what do we know about breaking high time frame resistances or support? You have to retest it. So right here, you come down because you found that to be resistance. You come down for minute wave 2, okay? And you break it. And all is good, right? And you just continue? No, you got to retest it. Where are you going to retest it? Likely in the 2024 bear market. 2024 should be a massive bear market. Yeah. Well, at least part of 2024. Okay? And don't be surprised if that is when you retest it, during the accumulation zone of that 2024 bear market. Does that make sense? So you're coming back down if we break it. Okay, if any of this is correct, if I'm correct in saying that this 13, 14-year resistance of Bitcoin is going to be broken in this bull market, and we're going to go up and hit millions of dollars per Bitcoin, guess what? Basic, straightforward technical analysis states and dictates that we come right back down to retest it as support, because you cannot break high time frame important resistance and not retest it. That is the confirmation. You have to create support. So in a bear market, in the next bear market after this run up, you're coming all the way back down, and that is all the way down to $184,000. So you were at $1 million, $2 million. You're coming all the way back to 184,000. That is unconscionable. If you're chart literate, you're making a 92% crash and you're just letting your assets go down 92%. Nah, that's not me. Nope. Can't do it. If I'm asleep at the wheel, fine, but I can't do it. So that's my answer to that. And again, people don't make those moves because they don't have the confidence to make those moves. Okay? I wouldn't either. If I didn't spend tens of thousands of hours poring over charts and doing this professionally and like really like putting everything into it. Like I've put so much time into doing technical analysis and to prove to myself, right? Because again, at the end of the day, it doesn't matter how much you do it. If you do it wrong, you just do it wrong. But I've done enough trading, and I've done it enough to prove to myself, my harshest critic, that okay, you have a decent idea of what you're talking about. Okay, you're not full of it. If I didn't have that confidence, I wouldn't sell either. When people say I'm not selling my Bitcoin, I'm never selling my Bitcoin, they're speaking out of fear. And that's okay. Because if you don't know, you don't know. If you don't know how to sell or when to sell, you just don't know. If you acknowledge that, that's fine. If you have enough to live off, you don't need to sell. You know that in the long run, whether you sell or you don't sell, you're going to make profit. That's okay. But if you know better, oh, you're going to avoid that because you can see it coming from a mile away, right? So that's my answer to that question. Yeah, that's pretty much it, guys. Let's see. Has anything done anything? No, nothing yet. We're just waiting. This 23K level is going to be broken, and it's going to be broken in epic fashion. We're just gonna wait. On the 4-hourly time frame, we've got some nice bullish crossing going on the momentum indicator. Let's wait for that to play out. And that's it. Guys, hope this was helpful. Hope this was useful. Like, share, and subscribe if you haven't. And I will see you tomorrow.